everybody, and thank you so much for joining us for one of our weekly webinars here at the Retirement Group for AT&T employees. My name is Samantha, and I am in client services here. I moderate these weekly webinars. In just a moment, we're going to be joined by our advisor, Patrick Ray, and he is going to be discussing how even the most minor errors can, when you're filling out your retirement paperwork, can lead to costing you money. Patrick's going to cover how to prevent these errors so that you can have a smooth start when retiring from AT&T. And after Patrick's presentation, I will come back on with him to ask him some of the questions you may have entered into the chat. Please feel free to ask away. It's completely anonymous. And Patrick will answer as many as he can, time permitted. And with that, let's bring on our speaker today, Patrick Ray. Hey, Patrick.
Thank you very much, Sam, and good afternoon and welcome everyone to our presentation today. If you're not familiar with who the Retirement Group is, we are an independent financial planning and retirement planning firm who focuses on employees of Fortune 500 companies. And we've been in business for over 30 years, helping people transition into retirement. And believe it or not, unfortunately, it's the second most stressful event that anyone will have to go through. And so given the importance and typically the biggest financial transaction that you'll ever have to make, it goes without saying that we want to be not only very diligent, but prudent and very comprehensive when it comes to understanding the options that you have and what's involved. And so today we're going to talk about the specific process of commencing your benefit. And I'm going to show you today what it looks like on the site, and we'll go through a case study and confirm what it looks like once you've completed the necessary steps. But before we do that as a team, we have a ton of advisors across the country who bring a ton of experience in the context of helping you transition into a successful retirement. And one of the many things that we do in an effort to help you with that is things like this webinar platform where we talk and educate our folks about things that are important to them and things that you should know, in addition to something that we refer to as a complementary cash flow analysis, or what we refer to as a retire kit. And so at the end, I'll give you an idea on how to get in touch with us in the event that you're willing to spend a few minutes with us. We're delighted to give you this complimentary service as a way of thanks for talking to us and actually absorbing what we have to offer in the event that you're looking for a partner in retirement. And so on top of this, we do a ton of information and webinars and things on our LinkedIn page where we update people on a regular basis. So if you're not already following us on LinkedIn, please do that. And you can do that by taking a picture of this QR code and attaching us to our LinkedIn page. So we're all on the same page here. Okay, so from a pension election process, what we're going to talk about is the estimate process, or what's involved in getting an estimate done. We're going to talk about how you collect your actual benefit. We're going to talk about the election information itself. We're going to talk about the tax responsibility that you need to ensure that you understand and are confident in making the right decisions with respect to that. We're going to talk about what happens if you're married and what your spouse is required to do. I'm going to talk a little bit about the executive side, where things are a little bit different if you're a executive at the company. And in the end, we're going to talk about the necessary steps from top to bottom in an effort to get this accomplished so that you don't miss a beat, and more importantly, follow all the steps that are necessary to have a what they call in good working order paperwork. And so the first step is to estimate your pension plan. And so frankly, it's rare that at this point we don't talk to people who have already or not already engaged in some manner of estimating how much their pension is worth at a given time. But this is actually a step that you have to take, and that you have to create the PDF that shows the estimate of the projection, which turns into what ultimately they would send you in the mail if you otherwise tried to collect your pension through contacting Fidelity and not bothering with the website itself. And so what we have to talk about today is the website specifically. And so when you log into Fidelity and you click on your pension to log into your pension itself, you'll want to click on the estimate tab, and at the top there are tabs that show a collect tab, an estimate tab, and you're able to actually save this data once you go through and model your statement itself, which has to do with picking an exit date where you stop working. You also have to indicate what date you plan on collecting your benefit. And so if you have not watched our pension webinar series, I encourage you to do that, because we talk about the significance of the timing of how you maximize the interest rates that apply to your pension themselves. So I encourage you to check our website or our webinar out about what we talk about with respect to that, because it's unbelievably important. And then you're able to model the dates. And so you pick an exit date, or stop working date is what they call that. Your next entrance date for the actual estimate is the collection of when you plan to commence your benefit or collect your payment. And then you want to also project interest rates in the event that you're giving the projection date for the commencement past the current tax year that you're in. And so we're in 2023. If you're happening to plan on collecting your benefit sometime in 2024, you would want to estimate the three tiers of segment rates that have to do with the interest rate that applies to your pension. And so we also have a webinar on that specific topic. And so I encourage you to check that out in the event that you have more questions about the tiers or how that works or what rate applies to what part of your future. And then what you want to do at the bottom is save this actual reference or estimate for reference purposes so that you can get back to this at some point in time during the process in the event that you need to do so. So when you go to the collection tab and you click on collect your pension, the first thing that's going to come up is a confirmation to show that you're still living at the same address, right? So your mailing address you have to confirm is still correct. And then you'll also have to confirm if you are single or if you're married. And so that's a drop-down window that you have to choose. And that's effectively the first step of your process. And so when I'm going to show you a screen here in just a moment that shows you what it looks like once you've actually confirmed and completed the steps, and that those steps are in good order, because it gives you a green check mark next to that particular step. So there's actually 3 steps that we've got to go through to collect your plan or collect your benefit. And this is the first and foremost step. And so step 2 deals with the confirmation of what payment option that you have. And so clearly you're not at the point of collecting your pension if you hadn't already thought about what pension distribution option that you're planning on taking. And so, of course, if you're taking a lump sum, it's vital that you know who to make the check payable to. Regardless of what you do, they're going to send you a check in the mail. If you're familiar with what a fishing license looks like, or in fact, I've had people throw this away, unfortunately, in the past because it looks like junk mail, but it's purple. And the check is on the perforated bottom of that. That's, only a couple of inches tall, actually. It looks kind of odd, but that's your lump sum check, and it's coming to your address of record. So this process on step 1 of confirming your address is correct is clearly crucial, and you want to make sure that that's accurate. So if you know who your lump sum is payable to, when you choose the lump sum option, it'll give you a window where you type in the actual payee of the lump sum check. And if you're using a custodian that's basically well known, or a process where they've already issued a check to them, you're going to see that this pre-populates and it's going to come up as an option for you. So like, for example, we use Charles Schwab. And so if I just type in CH, Charles Schwab pops up as one of the options. And so there's no miscalculation on the payee or how it's spelt. And so that's probably the best advice I can give you there, which is to just make sure you know who to make the check payable to in the event that you're doing a lump sum, or you're planning on rolling your funds into an IRA. But if you're planning on taking the annuity payment, obviously you want to know if you're going to take the single life annuity, which is what SLA stands for, or if you're going to take the joint and survivor option. And then furthermore, if you take the joint and survivor option, if you're married, then you want to know what percentage of that money that you're collecting will be paid to your spouse if you suffer an untimely death. And so that's what that percentage is for. And then in this step, we also have to confirm what tax withholdings that you want to withhold. And so clearly you have taxable income when you select your check as a payee for getting your pension check each and every month, right? That's taxable income to you. So you would probably want, in most all cases, to consider withholding federal tax. And then dependent on what state that you live in will dictate if you should or shouldn't withhold state tax from those payments. And so, and of course, in this process, or in this part of the step as well, you indicate where you want those payments to be placed or sent to, because they do that electronically, similar to how you were getting paid when you were working at the company. So once you get that step done, again, you'll have a green check mark next to that step. And so steps 1 and 2 are complete. And now you're on to step 3. And step 3 is where you basically confirm and submit all your information. And the big question here is if you're single or if you're married. Because if you're single, you can do this electronically. So if you're single, you can finish the collecting your benefit, and it'll bring up a electronic format of 3 signatures that you have to place electronically on the form itself, and you're able to click that as a submission, and there's nothing further for you to do if you're single. However, if you're married, the form that has to be printed out, and you can do this on step 3, where you print out the form. If you're married, your spouse must sign the authorization form in front of a notary. And so this is a very, very important step that you do not want to get incorrect, because they will negate your paperwork, and it will be considered not in good order, or NIGO for short. And so you do not want that to happen. And so in order to do that, you want to make sure that when you print these forms out, that your spouse gets their signature done in front of a notary, and then you sign the form and date the form, of course, and then you upload or scan back in all of the pages, which will then confirm that step 3 is done. But what's unique about step 3 is you do not get that green check mark immediately like you do in step 1 and 2, until they've actually confirmed your payout option, that you've all confirmed the information that's accurate, and they review that the paperwork's in good order. You will then get a check. And typically, from my experience, that takes about 7 to 10 days. And so what you'll have to do is log back in, a week later or so, or keep checking after about day 4 or 5 if you have a green check mark, to know, in fact, if your paperwork is in good order. So if you do that, the basic screenshot looks like this. And so if you can see my screen, you have 3 green check marks next to steps 1, 2, and 3. Okay, so green check mark completed, everything's in good order. And then you'll notice that over to the right, it will confirm your payout, your benefit commencement date, and the payee. And of course, in this case, you don't have a surviving beneficiary, because you are taking the funds out of your pension. And we would assume that you would set your IRA up correctly with a beneficiary, of course. And so that's what the screen looks like once you've completed this step and have all the paperwork in good order. Now, on the election information, you want to review and verify your election itself. And this is by reviewing the packet of information that you either take in form of PDF if you're doing it electronically on the site, or that they send you in an 8.5 by 11 envelope if you do it over the telephone. So if you contact Fidelity and want them to mail you the paperwork, they're happily willing and able to do so. You just got to confirm or verify that all that information is correct. And one of those documents inside the election paperwork or packet is something referred to as a tax and distribution notice. And this is a notice that is an IRS document. And basically what it says is, it informs you that if you don't do your rollover process correctly, you could potentially be subject to taxes and penalties. And so this is why you potentially want a service professional or someone in our shoes to help out, not only dictate what your options are, so that you understand what choice that you're making, but how to implement that with respect to the process itself, to ensure that there are no errors, because this is not something that you want to have an error on. And so through this summary plan description, of course, which is on the website, you can confirm what your options are if you don't already know that, through your lump sums, or in a combination of your partial lump sums and residual annuity payments if you're a manager, as well as all of your single and joint and survivor benefit options from a annuity perspective. And so we talked a second about the tax withholdings, but this is a pretty important step, so it's worthy of another slide in and of itself, which is to just ensure that, when you take a payout on an annuity from your pension, it is taxable income to you. And so you want to ensure that by all accounts, you're withholding federal taxes, because you're going to owe the IRS some money if you don't do that. But more importantly, on the state side, it's the same if you're in a state that has state income tax, or that your pension is not avoidant of not being taxed. So there are some states that don't tax pension payments. And so again, you need to state or reference the state that you live in to confirm which one of these is relevant to you in your circumstance. And that way you can confirm that all of this information is accurate. On the spousal part, I talked about the spousal part with respect to their signature being required to be notarized. This is something that I've had as a mistake that was done prior to talking with a couple of cases that I've had, where people were asking for help after the fact because they thought that they could get through the paperwork on themselves or by themselves, and they either didn't have the spousal consent form notarized, or they did not return all the documents. And I cannot impress upon you how important it is to ensure that once you get this step done, and you upload all this information back to the website, that you send every single page that you printed out back up to the system. And I mean that with all sincerity. Even the one that says this page is intentionally left blank. I think it's page 6. So when you get this page, it's going to say this page is intentionally left blank. That has to go back up with the documentation. So I've had some people send just their signature pages and assume that that's okay, and your paperwork will not be in good order if you do that. So please be ensured that in order to make this completed and you get all the paperwork in good order, you have to send back all of the pages when you do this on this step. Now, as far as the executives that we have that might be applicable, there's going to be other considerations that we're going to have to get Fidelity on the phone for. Stock options are one of them. Your deferred comp payments are another. And then if you're subject to Rule 415, which is a situation where it's possible that you have a part of your pension that is required to be paid out to you in a lump sum format, which is a taxable event, unfortunately, and there's no way around that. It would be because you've put more in your pension than the IRS has a calculation for that they're allowing you to put in as a whole. And so consider yourself lucky in the event that you're in a 415 scenario. But of course, it's a double-edged sword because you're going to pay income tax on that distribution and you cannot defer it regardless of what you wish or plan on doing. And then NUA, the stock has seen a little bit of a rebound, so it's possible that NUA exists, but basically NUA stands for net unrealized appreciation. And this typically comes into play when you have low cost basis in your company formed stock. So if you hold AT&T shares inside your 401k and the cost basis is lower than the actual value, you would consider potentially taking a distribution in a different format, which is something you should watch if you haven't watched our webinar on the 401k and the special tax and distribution notice and the NUA options and so forth, because we talk about that in there, which is forcing that money out, being comfortable with paying some tax on the cost basis initially. And then what it allows you to do is only be subject to capital gains tax when you finally sell the stock, as opposed to leaving it all in your 401k, rolling it into an IRA, and then taking income distributions from that, because that's 100% taxable income to you. So it's a tax planning technique that we've been talking about and been using for years. And then, of course, retain all your documents, folks. Look, if you do it on the website, you're going to get a PDF document on the estimate, and then you'll get another confirmation of the PDF document for all of your forms, which you should save, obviously, for reference purposes. And then if you do this through the mail, you're going to get an 8.5 by 11 envelope in 2 different occasions, which has one, the special tax and distribution notice, and all of your payment options is step 1. And then the second step is the forms that you have to turn back in and mail back to them in the event that you do it over the mail, with the spouse's signature being notarized if you're married. So again, I mentioned this earlier, making sure you return all your pages is vital. This is absolutely a way that they'll check and ensure that your paperwork is not in good order if you do not return all those pages. So be sure that you return even the page I mentioned to you that says this page is intentionally left blank, because it exists and it needs to go back up there, okay? So as far as your next steps are concerned, look, if you're in a position to commence your retirement benefit from the company, then hopefully you've done some due diligence on looking for a partner in retirement in the event that you want some help with this transition, or you want some help with managing your retirement assets once you walk off the payroll. But if you already have either interviewed folks or talked to them, make sure that they're doing a cash flow analysis for you to confirm kind of the projection or the trajectory that you're on with respect to your spending habits and your needs for income and your financial goals and your retirement objectives and all that kind of thing. But if you haven't already done that, please reach out to us. Because we're delighted to help you. We are a specialist when it comes to talking with folks, not only from Fortune 100 companies, but from AT&T specifically. I personally have met with over 10,000 AT&T employees in the last 20 years. So we feel like we've got a pretty good handle on the team of answering all your questions and getting you in the right context and mindset of what decisions that you have to make, especially given that retirement is one of your most important financial decisions. So make sure you have a plan. Retirement is a wonderful, if you have two essentials, much to live for and much to live for. So make sure that you have much to live on as a key, which in other words, take some planning, and you want to make sure that what you've saved and worked an entire lifetime to accumulate, you've planned appropriately on how that would be allocated over your life expectancy. So if you're open to chatting with us, you can do that. You can contact us in a couple of ways. You can reach out to us at info@theretirementgroup.com. You can email us there. You can also call the 800 number, which is 800-900-5867. You can take a picture of the QR code on the left, and that will get you access to a calendar, and you can pick a time that works for you that you can talk with myself or one of my teammates in an effort to get your questions answered, and hopefully we can get you on track in the event that you're not already there. And then last but not least, that's the QR code again to our LinkedIn page to the right, where I encourage you, where we give updates. The interest rates just changed, by the way. They just came out last week, and they have increased again. So there's only one more statement window or a month before the rates get locked in for the entire next calendar year, which is in November of this year, which would be good for the rates for 2024. And so if things stay status quo, the rates are going up. And so, yeah, this means that it could potentially impact you in a negative way. And so you should reach out to us to see what alternatives that you may have. And so with that, what I'll do is pass the webinar back over to the woman in charge, Sam, and see if we have any questions before we let you go for the afternoon.
Yes, Patrick, excuse me. Let's answer a few questions. Like Patrick said, if you would like to book an appointment with either Patrick or one of his colleagues, if you stick around after this video, you will be redirected to the retirement group's website where you can book an appointment with Patrick or one of his colleagues, like I just said. So let's answer this first question, Patrick. I'm trying to understand the tax notice I received from Fidelity. Can you provide a detailed explanation?
Yeah, good question. I mean, this special tax and distribution notice is an IRS document, and like I had mentioned earlier in the presentation today, it's a notice that they being AT&T or Fidelity as the administrator of your plan can be notified that they have given you the information that you need to be aware of with the nature of the taxes and potential penalties that are involved if you don't do the rollover process correctly, or if you don't do the withholdings correctly, if you're taking the annuity payment. And so it's just a confirmation that they've disclosed to you that there are potential tax and penalty ramifications based on your decisions. And so you want to be ensured that you're making the right decisions with respect to this plan.
Alrighty, thank you. This next one, given the importance of handling our pensions correctly, can you explain why Fidelity's form indicates that part of my pension is non-rollable and taxable?
Yeah, so this has to do with the 415 rule that I was mentioning, where if you're a highly compensated individual, it's possible that you have more money in the pension itself than the IRS allows you to have, in which that would mean that you have a one-time distribution that you're required to take as a payout, which is a taxable event to you. And so you'll see this because it stands out like a sore thumb on your projection, because it says a non-taxable distribution, and then it says taxable distribution. So it's a separate pool of money, and it's a taxable event to you when you commit your pension benefit, basically.
Alrighty, that doesn't sound like a bad problem to have.
It is not.
Alrighty, then the third one here. To prevent common errors, what are the critical mistakes that AT&T employees must avoid when filling out retirement paperwork?
Getting help. That would be my first priority. No matter where you go, talk to someone who has been through the process before and who can guide you on these decisions, in which we've obviously here at the Retirement Group have helped hundreds and hundreds and hundreds of people over the years. But specifically, some of the mistakes that I've seen on the pension side, when you have to upload your documents, if you're using the website and you just don't upload all the documents, you either upload just the signature pages or you upload page 2, 4, and 6 and not all of the pages. This is a problem, folks, and it's going to hold up your pension distribution. And so I'm telling you now, you need to send back all of the paperwork, all of the pages, even the ones that say this page is intentionally left blank. And so that's the biggest mistake. And then look, I've had people who thought they could do this on their own, one in specific. which I hope never happens to anyone, frankly, regardless of who you choose to do business with, is that I had someone who told me that they didn't need our help and didn't need my help specifically and thought they had it figured out until they contacted us after they were notified by the IRS that they had a massive tax bill because she had the funds payable directly to herself. And so not only was that a taxable event to her, which she couldn't unwind, it was also a penalized event because she wasn't 59 and a half. So it created a massive amount of problems. And so those are the two biggest errors that I see with respect to filling this paperwork out correctly.
Yeah, those are very easy errors to make, I assume. I would imagine.
Yeah,
Happens a
they
lot.
are. Yeah, they are, and it's because look, you're this is not something you do on a regular basis, right? It'd be if you could imagine me taking the time to try to go and replace you at your job when you're still working at AT&T, for example, for a day, I'd be awful, right? I'd probably get fired immediately if they had the right to fire me because I didn't know what I was doing. And so when you see something that's unfamiliar to you and you're not only unfamiliar, but you're not sure on the options and how it works and what plays into what turns out to be one of the most important financial decisions that you have. It's just imperative that you have help. That's all. And we're here in an effort to do so. If you're open to having a partner, that's what we're here for.
We're here and very familiar with the process. Okay, Patrick, this last one before we end today. To avoid taxes and penalties, what are the steps for opening an account, transferring funds from AT&T, and completing the paperwork correctly?
Yeah, great question. So as I mentioned at the very beginning, or during the presentation today anyway, we use Charles Schwab as a custodian. And so we would set your account up at Charles Schwab. So we would send you some paperwork to open up an IRA there. And then once we do that, of course, the check that you get sent from the pension usually comes to you somewhere in the neighborhood of 6 to 8 weeks after you leave the payroll. Well, I should say after you commence your benefit. So you could leave the payroll and not do anything with your pension if you choose. But it takes about 6 to 8 weeks to get your check, and then you would submit the check to our office, and we would get it deposited into your account, and then of course take the necessary steps to invest the money appropriately based on your goals and objectives and your cash flow analysis that we ran for you with respect to how much income you're going to get, et cetera. And then as far as the transferring of funds, of course, the pension is just one of the potential buckets of monies that you have. If you have participated in the 401k and we haven't advised you that you should leave your 401k there because of something like post 55 separation, as an example, then what we would do is we would make a phone call to Fidelity because that's a different process. And so what we talked about today was the paperwork process to get your pension completed and commenced. But there's a separate process that requires a phone call to Fidelity to roll your 401k over. And depending on if you have after-tax money in there or not, or if you have AT&T shares in there or not, would dictate what options that you have on the monies that are inside your 401k and getting that to the IRA that we would establish. So that's the process. We would send you some paperwork to open up the IRA and then take the necessary step depending on if you have a pension and or 401k to get those funds in there.
Alrighty, Patrick, that was all we had time for today. Any closing remarks before we end?
Wonderful. No, not at all. I'm hopeful that people got some value out of what we talked about today. This is a huge deal, folks, and it should not be taken lightly. And as simple as making a phone call to our office to get some help and get set up with one of our team members or myself, we're delighted to help you because that's what we're here to do.
Alrighty, Patrick, thank you. Thanks,
All right.
everybody. Have a
All
great
right,
day.
everyone. Take care.